Hey Mark, what's up? It's Pete. It is September 18th, Tuesday morning. I wanted to do a review of how I would have looked at the Qs yesterday. Long term, obviously we're going to start with the daily chart. You know that's my main time frame. So the long term trend is still higher. However, within this long term trend, I'm going to zoom out a little bit. 99% of the time when I draw these out, I generally look for signs of a potential change of trend, and actually we got one here. I call this a failed test. So in other words, you push up, pull back, and then you fail to test the previous high. Now yesterday's down move was mostly based on the trade war news, but the fact that it happened here after this, pretty significant. And we also had a bearish U-turn here the day before on Friday. So what we're going to do is long term, still pointing to the upside, so bullish order flow still in place on the daily charts for me, but that would not have stopped me from trading for cash flow on the short side. So as a general rule, I will go down to the 60-minute charts and use the hourly charts as my time frame to determine if I wanted to be short. In this case here, it would have been any hour that the candles were green. So really the only hour that we bounced here was this 1 hour here. So pretty much for the rest of the day, I would have been looking short. This long-term 180, 160 would have been the support level that I would have stopped shorting into. So I would not have shorted this last hourly candle here. So I'm going to first zoom down to the 15-minute chart. One thing that you and I have not really discussed that much is the possibility of using a additional signal on top of what you do. I know I brought it up several times. It's something that I use all the time, and that's this inside candle breakdown. So essentially here we had inside candle push down here, which was this candle was inside this one, and the low of these two candles, 182.60, would have been the entry, so about a 60 cent move to the downside. Then we actually immediately trade into another inside candle and another inside candle, and this would have been probably one of my more aggressive sell shorts, despite the fact that this 180-160 support was here. So the low here out of this inside candle, so again we had inside candle, and a push down. So this short would have been 182.20, looking for it to push all the way down here, and it did not. As a matter of fact, within that same candle, we ended up getting a bottoming tail. So this little short-term inside rally here, this is that hour we were talking about. When it pushed down and bounced, I probably would have taken a flat here at the same price I got in. Now this is where the hourly candle turns green, so that's where I would be stopping my short selling. So I would not have been looking for a short at that spot at all. Now if we want to dig down to the 5-minute candle, we could do the same thing. You can see basically you don't really see the same entries as clean. Maybe you could justify this one here for the short sale, and the bottoming tail on the 5-minute chart might have got you out a little bit sooner because it pushed down, did not get down, and that's kind of a reversal entry. So whether or not you wrote it back up on the 15-minute chart and took a flat, or tightened up a trailing stop here for a cash flow trade against the downtrend, which is again what normally happens when you have a long-term uptrend and a short-term downtrend, that particular move you're not going to hold, which I've been writing every day, trading for cash flow. So either way, I mean, the 5-minute chart bounced. You could have trailed it and not stayed in there, but if you stayed, worst case scenario, you end up having a flat on the trade, which is really not that bad considering it's still, again, this is a long-term uptrend. So here's that hour that we bounced, and after this hour, we start to look for new entry signals on the short side, and we really don't get it here on this push down, probably not trading between 1 and 2 o'clock anyway. But what's kind of interesting here is we actually do end up getting an inside candle here after a failed breakout of this 182.60, which if you remember, that was our first target on the downside. So we pushed back up 1, 2, 3, 4, 5 different times up to this level and couldn't get through it. So this inside candle and push to the downside was actually a really good end of day trade. The problem was we didn't actually get a perfect entry signal here on the 15. You can make a case that this was a topping tail looking to push down. And again, as I said, this would have been my target, the 180, 160. But if we go down to that 5-minute chart in that same area, you can see we had all of these topping tails, which really gives you a desire to say, all right, well, we're pushing up to this 182.50, 182.60, and just can't get through there. This is something you and I really haven't done that much of, where I'll take a look at a stock and I'll be like, okay, what's the real number it's having a hard time getting through? So I know classic technical analysis, people will be like, oh, measure it to the top of the candle. That's horseshit, because this is the price. It's having a hard time getting through this price. It's having a hard time getting through this price, right? It's not this level, this one little penny up here. It can't get through this level. That's what I'm paying attention to. Gets through there, fails. Gets through there, fails. That's the real number. And then we attempt it up here again. One last bullshit attempt to break out. Can't do it. Again, can't do it. So this push down at the end of the day, you should have had the mindset of, I'm looking for a sell short at the end of the day. The tricky part here was we didn't get a perfect signal. You might have had one where it bounced here. You probably got one as a stochastic rollover on your charts, mostly because you could see we were actually down, so your hourly candles and your hourly charts were probably pointing down. So you probably got a really nice clean bounce here and a rally in stochastics and then a rollover. So there was really no reason at all to miss this move at the end of the day. The only thing that, like I said, the 180, 160 would have been where I've been looking for the for my target. So I wouldn't have squeezed this last 40 cents out, but that's okay, because if you got this pullback and shorted it, you almost have $1 here, maybe 75 cents, or depending on what that move was in contract. So I think this will be kind of fun to do, because I'm giving you a little different perspective of how I trade versus the signals that you use, and maybe opening you up a little bit just to some other stuff that I look at. Specifically, I got to tell you that inside candle breakdown here, like you see here, it's a really powerful signal. This is one that is very, very clean and leads to some really, really big moves. You got an inside candle breakdown, leading into the end of the day. So I'll speak to you soon, pal.